Hi traders, welcome to this Blueberry Markets video update with me, John Kibler, Senior Market Analyst. In this video, I'm going to go through the week ahead, going to highlight that key data and some charts of interest. So this week's going to be pretty interesting. We've got a Federal Chair Powell speech early on Monday. He's basically talking about inflation and the current interest rates, which is going to be rather interesting considering that the Fed held at 5.5% last week, and we saw a significant jump in the non-farm payrolls number at 353k. Wasn't expected that was expected to come in a lot lower, below the 200k level, and we saw a huge jump. We also saw a very big jump in average hourly earnings, and the US dollar spiked off of that. We also have some data out of the US this week, including ISM Services PMI that is expected to show some growth as well, rising from 50.6 to 52. So that's going to be something that you need to take into consideration this week. Are we going to see the extension of the US dollar strength? In central bank news this week, we've got the RBA rate statement and cash rate decision expected to hold at 4.35%. The data in Australia has actually been coming down. CPI came down quite recently as well. So I think most central banks are going to hold right now. Don't see anybody really pulling the trigger too early, especially after what Federal Reserve Chairman Powell said last week. So I'm expecting the RBA to hold at 4.35%. We then have Bank of Canada Governor Macklem speaking as well, and we have some employment data out of New Zealand, Canada, as well as the US with the unemployment claims. So again, not as heavy as last week in terms of data, but some really important data coming up. Going on to the strength meter then, we've had some significant changes here. The Canadian dollar, one of the strongest currencies right now in that reversal zone, so CAD could be one to watch. US dollar continues to remain fairly dominant as expected. Swiss franc starting to drop again now from that reversal zone, and we can see that the Japanese yen did get slightly stronger, although that did kind of fade towards the end of the week. And we've also got the Australian dollar as one of the weakest currencies right now, again in that reversal zone. So a lot of currencies moving at the minute, lots of currencies coming into reversal areas. We'll have to see how they play out. So let's go on the US dollar index first then. We've finally sort of breached that consolidation that was being held around about the 103.50 level, coming into potential December highs now of 104.20. I think the real key area is going to be the 104.50 area. I think that could be a bit of a sticking point, but if we do get to this area and breach it, then we could be going to heading up towards this kind of consolidation that formed in October and November of last year. So the 104.50 to me, very important point of interest, and I think that's where the US dollar index could be heading towards. Going on to the Australian dollar versus the US dollar then, again, we kind of talked about this 0.66 area being a bit of a cap for price at the moment. Finally, we started to see, after that NFP release, the dollar getting stronger and a breakdown of this Aussie US dollar price. Now, we do have a close sort of below these lows now, below that 0.6525 area. Is that going to hold though? Are we going to see the continuation into next week? I think Monday is going to be very telling. I think if we close kind of back above in this area on Monday, then I expect maybe the dollar strength that we saw from the NFP to sort of fade. However, that's going to really put a dampener on the Federal Reserve cutting any kind of rates in March. I don't really see that happening now, dependent as well. Again, we also have to depend on the data coming up. But if the dollar data continues to get stronger, then we could see Aussie US dollar push more towards the 0.6450 level. Going on to dollar Swiss then. Dollar Swiss was one of my markets to really look out for in terms of trend in the market. The last time the strength meter actually pointed out a potential trend in position was back in October, and it was actually saying to short dollar Swiss, and we saw a very sort of nice trend develop from that. We've got the opposite this time, so I'm looking for opportunities to see if we start trending to the upside, and I can see that we kind of breached that 0.8570 area. We retested it, starting to see some buyers coming back in now. So again, I think if that dollar momentum can continue, then the market may go and target this 0.88 highs. Going on to gold then. Gold, very interesting at the moment. We're kind of capped between that $2,060 level and around about the $2,010 area. Obviously, dollar strength can push gold prices to the downside. So price may remain within this slight trading range here. If anything changes, like I said before, if we do start to see a little bit of dollar weakness entering the market and we see gold breach this 2060 high, then we've got the highs that formed towards the end of 2023, which come in around about that $2,080 area. But you know me, I like to see trading ranges form, and I think that this area here could be a bit of a sticking point as of right now. So those are the key charts to watch this week. I hope you enjoyed this video. If you did, leave it a thumbs up, and if you're new, hit that subscribe button. I'll see you in the next video.